Hello, welcome. A very happy Diwali to all of you. And this is the annual Big Fight Diwali special. Every year at this time, we get all the top experts into one particular show to ask them what is, for many people, the single most important question to be addressing. Where do we invest our money for the coming years? You can say, okay, long term and for after that also. But the immediate question on everybody's mind is quite often, assuming, of course, you do have some money to invest, and in these days of slowing economies, that's not always certain. But if you have money to invest, where should you be investing it? Should you be buying gold with it? Option. Should you buy a house or put it into real estate, which is another option? Should you put it into the stock market? And if so, which stocks and which sectors should you be looking at? Should you put it into mutual funds? Is that the right thing to do, which is in some ways linked to the equity? Should you just blow it up, go spend the money, have a party, go and, really just invest it in all sorts of right things, or find some other ways of busting up the money? So what should you do with your money? That's the subject on this annual special Diwali episode of The Big Fight. And some of our familiar friends who've been around to talk to us about this year after year are back to join us. And I have to tell you, most years they have been right. So you need to hear what this panel of experts is saying. They've been coming back year after year, and they have been right on most years. So listen to them and listen to them carefully. Starting, of course, with Ramesh Damani. I keep saying few people know more about what's happening in the stock market than Ramesh Damani, and that's probably an absolutely correct thing to say. So Ramesh, a pleasure and a privilege as always to have you with us. Certainly, very few people in the country or in the world will contest the fact that no one knows more about mutual funds in India than this man, Dhirendra Kumar, who's with us right here in the studio, the CEO of Value Research. If you are investing in a mutual fund, I can tell you this, just do one thing. Listen to him, invest in what he tells you should invest in, and you won't be wrong. So great to have you with us, Dhirendra, as always. Niranjan Hiranandani is with us, CMD of the Hiranandani Group, will be telling us about real estate. Should you be buying a house? If so, now. Wait for prices to come off, wait for prices to go up. And all the stuff about the real estate sector you're going to be here to tell us about. Gold, that other perennial favorite. Should you be buying gold? So Nitin Khandelwal is with us, Chairman of the All India Gems and Jewellery Trade Federation. Great to have you with us. Davandeep Singh Soni is with us, Head of Growth and Marketing, and MobiKwik will find that as new digital ways of busting up our money, if that's really the right way to go and where to invest it, if at all. Dilip Cherian will probably tell us to just have a party, right, Dilip?
Absolutely.
Otherwise, represent the rest of us as common citizens and try and make sense of what all the advices that we are getting. Right, thank you all so much for joining us. And before we go any further, quick look at what happened in the previous year. So Diwali to Diwali, how have all these various asset classes performed? And is that a trend likely to go forward? Ramesh, let me start off with you. Let's look at the stock market for starters. Buoyant, 32,000, roughly thereabouts where the market has been, 31, 32,000 or thereabouts is where the market's been at. Some would say that's a doubling since before the Modi government came. Some are now saying, like Rhythm Desai and others, it could be 100,000 in 10 years. Your sense of the way the stock market has performed in the previous year, and is it likely to continue?
Thanks, Vikram, and a very happy Samvat to you and all your viewers at NDTV, and thank you for having me on this show. I think last year the stock market returns have been stellar. I think by some measures we're up almost 25% in dollar-denominated terms. And I think the reason for that is that finally for the first time, we've been talking about this issue since 1992. Indian investors are supporting the market with their checkbook. They're buying on the dips, they're buying great businesses, and that has been a huge force of stabilizing the market. Despite some foreign selling, domestic investors have stepped up, and they've not been worried by the squalls that have hit the market, for example, demonetization or GST. They've stood the faith, they've held the belief. I think the reason they've held the belief is they finally understood that in a basketball game where people with 5-footers and 7-footers are playing, you always want to bet on the 7-footers. What I mean by that is because of the inherent nature of equity investment, long-term capital gains are tax-free, dividends are tax-free up to 10 lakhs. People are understanding what a huge advantage that presents to them in terms of wealth creation. And there's no better time than Diwali to reflect on this fact that the stock market has been an astounding wealth creator in India.
Can I just ask you the leading question, though, which I'm sure many people will be asking? It's obviously the stock markets have done really well, but some people will be getting concerned by now. Certainly, if you look at global markets, some talk about the fact that by many parameters, markets are probably more expensive now than, I think, only twice before in history, just before the 29 crash and just before the dot-com bust. That's how expensive global markets are. So globally, some concern. And even in India, the economy has been slowing. So therefore, though you're right, people are coming and investing, there's some people wondering that, are we starting to see the peak and is there a crash around the corner somewhere?
Vikram, the point is that there's been a secular change in Indian mindsets. Indians are finally believing in India Inc., for example. And I think the reason for that is because they have seen the long-term compounding that the Sensex has delivered. While you rightly point out there are fears in the global economy, the Fed will start raising rates, the North Korean problem that's going on. And in India also, you're right, there's a sense of stalling in the economy. But I think most people realize that India is a large ship of state, and to change it around takes a little bit of time, and that people who've kept the faith have been amply rewarded. I think the opportunity cost of not being in Indian equities is fairly steep because you're not getting anything in fixed deposits, real estate is in doldrums, and gold is just like an insurance or safety play. You can't put serious amounts of money in there. So I think Indian investors are finally rising to the glory that the stock market is a great place in which to compound your wealth, and I think that will continue. I think while there will be periods of volatility, there will be corrections as normal in the market. I think the Sensex is headed higher over a 1, 2, 3 year period because the bull market that started in 2013 seems intact and doesn't seem like it's slowing down, at least. Slowing down but not stalling.
Let me just get you in on the equity part because you obviously advise a lot of small investors on mutual funds. One of the things that Ramesh was alluding to, I think you would have the real data, the real data to be able to show that Indian investors voting with their checkbooks. That, according to many people, is, as Ramesh was saying, the big tectonic shift, those SIPs that are coming in. SIP, those 3 letters that you, I think, on this particular show, year after year, Diwali after Diwali, have been telling people SIP is what you need to do. Luckily for some people, they've been watching the Diwali episode of The Big Fight and others, places where you've been saying this, and they have started to do that. They have started to do SIPs. And that is paying them rewards, and also that's what's keeping the market afloat. Would that be a fair thing to say?
Absolutely. It's just not that. Of course, it has been a very gradual thing. But a lot of other, what Ramesh was saying, that the struggle of the real estate sector or real estate as an investment avenue, the decline of interest rate, that I think has been a very significant move. And of course, mutual funds, we should just take one particular point, that investors won't continue, will not have the belief and faith till there is a demonstrated ability of an asset class or a way to invest. Because historically, Indian investors have always, taken a very seasonal, opportunistic view of equity. This, I think, has brought about a mainstreaming of equity. We earn every month, we save every month, and then you see that it is generating more return than fixed deposit.
Normally, what used to happen was almost some sort of gambling, that people would either come and say, "Bhai, satta bazaar karte hain, tip batao, kal kya chadne wala hai." That's one, which is dangerous. You're sure to lose your money in that. And B, they would only come in and invest money when the stock market is at a peak,
it's already
right?
Easy to invest, and the market has already gone up. We have seen it in look at 2008, the boom in infrastructure funds, the technology boom, or 1994, the Morgan Stanley story, or so those kind of Harshad Mehta boom, what we saw, or late 90s when we saw that 3 sectors primarily driven by 3 sectors. So those were seasonal things. Investors came in opportunistically. It never became a way of life. Mutual fund is actually democratizing market, doing it in a manner where investors are experiencing it in a right manner. It is becoming a habit. It is not becoming an event. Investing in the stock market was always an event. So I think this is a very fundamental change, and it is driven by need, because what you earn, think of an old person who has 50 lakh rupees in deposits. All the money that he generates, it's taxable. It is not able to beat inflation, and then his inflation is going up, but his capital remains constant. So he is looking for avenues to supplement his income. Okay. And there is no other way where, if you look at the kind of investors coming into mutual fund with their one-time investment, to have a periodic withdrawal plan, things have changed quite,
And
changing.
is that also keeping the stock markets afloat? Because you're not dependent on FII buying. Indian money is coming in now in a large. What's the amount right now which is flowing into the stock markets every
getting
month?
close to 6,000 crore, which is substantial.
6,000 crore rupees a month is coming into SIPs.
Coming by way of SIP, and that is very substantial. But that in itself, just money flowing into the market cannot support a market infinitely, indefinitely. Companies have to do well. Corporate earning is the primary driver, and fund managers have to exercise their selectivity. They have to exercise caution. Investors have to do their asset allocation, choose the right kind of fund. Equity may not be the right kind of fund for everybody.
Dilip Cherian, is that the secret of all of your wealth? You've been tucking away money into mutual funds and into equity?
Two comments. One as a citizen, and the second as an economist. As a citizen, it's very clear that the stock market has changed in its character of investors. The investors are now no longer looking at it as a roulette, wheel. And earlier, I've seen class after class, generation after generation, investing in the markets when everybody said, oh, the markets are going up, let's jump in. So that phase is over. Now people are recognizing the markets are going up, but...
So you're no longer going to a restaurant as used to happen in 1992, bull market, and the people who are serving you are coming and saying, well, what tip do you have to where to invest?
That's right.
Instead, it's a logical, systematic way of investing.
And I think the average citizen has come to that conclusion as far as this asset class is concerned.
Okay.
As an economist, I think the big point is, where is the economy headed? Because there is one point at which the economy has to outdo the market. Otherwise, the market cannot keep up with the returns it's giving.
Fair enough.
And
Very good point.
There is an anxiety there. And that anxiety, is it a 2-year anxiety? Meaning 2 Diwalis from now, will the markets have to go up further because the economy has performed even better than we thought? I doubt that. So that's an
Or
anxiety.
will the markets correct because the economy is disappointing and you're thinking that corporate earnings are going to grow up? How long can liquidity keep the markets afloat? That, I think, in essence...
That is my issue.
That, in essence, what you're saying. We'll come back to Ramesh and to Dhirendra to get their take on that. Let me turn to you. So, on the equity market, is that something that you personally would do and recommend everyone that they do it in this sort of a manner?
I'm a SIP investor, thanks to him again. But I have a contrarian view to what's happening, what people should do with their money.
Always a good thing to do. Ramesh Damani will tell you, if you have a contrarian view, you're almost certainly going to make money. Contrarian view, for those of you who are wondering, is this is what everyone is thinking, the markets are going to keep going up. Do the opposite, and that quite often works.
So what we've seen is typically people save throughout the year and they bunch up their expenditure during this big party time. So what we've seen is companies also, they tend to bring out offers and deals a lot more during this festive season. Yeah. And I think while it's good to save, I think it's also good to party at least.
Yeah, I'm going to come to the partying part. I know that's what you're going to try and say. Take advantage of all the Diwali offers. But okay, assuming you are investing your money, you're not withdrawing all your cashing in your mutual funds and buying a television or something with it. Where would you save your money, invest your money? Stock market?
I am a mutual funds guy.
So, you're a mutual funds guy. Okay, very clearly in Dhirendra's territory. Let me come to Mr. Hiranandani. I know you're going to talk about real estate, but other than real estate, what do you feel about the equity markets right now, today? Mr. Hiranandani, equity this year, or would you say that equity is done now, it's had its rise?
No, I don't think any of the markets have done its time. The question is only very simple, that these fluctuations in terms of moving up and down because you have put too much liquidity into the stock markets, at some point of time it is bound to be corrected. But whether it will be corrected in 3 months, 6 months, 9 months, 12 months, 24 months, is not my expertise to do. So I think what one should do is really balance investments into the stock markets or mutual funds, because I don't see this being forever. We have always seen that there is going to be correction at some point of time, but I'm not the expert to say whether it will happen in 12 months or 24 months or 36 months from today, similarly to any situation that happened. But correction it will have, because I think there is excess liquidity coming into the stock market, and the growth with 5% is certainly not matching it. The equities are moving much faster. The valuation, of the stock market are much faster than what industry is developing. So either GDP has to grow faster overall to produce the results, or the correction will be seen, but I don't know when.
Okay, there will be a correction, but you don't know when. I'm going to throw that to Ramesh in a second or two. But Nitin Khandelwal, just wanted to get your take on the equity markets before we come to gold or jewelry.
I partially agree with all people. We should invest in 25% in all the avenue, because all are having their own importance, and it's time matters only.
All right, now that's a nice diplomatic way of putting it, that invest 25% in everything. Now, I'm not sure how it's going to add up. A lot of people will try and do it. 25% equity, 25% real estate, 25% gold, 25% bust up, and try and find 25% more for Dileep's party. But you know, I'm not quite sure. I'm not sure how you'll achieve all of the above, but I'm sure they will try. Ramesh, let me just come back to you with one of the major points that was being raised by Niranjan in particular. It's a liquidity-driven rally. There's 6,000 crores coming in every single month on SIPs, and that's why equities are afloat. Maybe similar factors are happening globally as well. It can't continue forever. If the returns aren't going to be shown up, if companies are not doing well, if the economy is not growing that fast, if profitability and the EPS is not rising, at some point there will be a bust. He says, I don't know if it will be 3 months, 4 months, 9 months, but there'll be a bust at some point. Would you agree with that view?
Vikram, bull markets, as you know, always climb a wall of worry. Are we headed for a crash? I don't see any signs of that. You know, the froth associated, the leverage associated, I don't see any of that happening. Yeah, we are turning around the ship of state. It takes some time to turn around, and corrections are in nature of the market. So if you can't live with the volatility of the market, then perhaps the markets are not a good place for you. But let me tell you the opportunity cost of not being in the markets, or what you will miss. This is a young country. I think most 50% of Indians are below 25 years of age. And let's say they're at 25 and they're looking to retire at 55. And for 30 years, they want to plan the financial life. If they're in the market and they can double their money every 3 years or every 4 years or every 5 years, you know, that 10 or 20 lakhs they start with could become as much as, 50 crores or 100 crores over a period of 30 years. And the reason for that is because the Sensex itself is giving returns of 14-15% without dividends, and we're not taxed on that. That is the huge advantage. That is what I mean by when I say we have a team with 7-foot basketball players. And because the government is giving you tax incentives to invest in Indian businesses, if you still choose to invest in inefficient ways of fixed deposits or bonds where they are taxed, I think you're doing a disservice to your financial self. So I think given the economic and the macro environment, there will be corrections. And you're right, a lot of stocks are expensive.
Okay, so net on equity, risky, could go up and down in the short term over a long period of time. Good investment, that's what we seem to be hearing. Would that be a fair way, Dhirendra, of summing it up? Don't put money into the stock market that you might need 6 months from now, that you require in the short term. This is long-term money. Get into the habit of putting a certain amount away every single month and keep that going for a long period of time, and that's the best investment you can make.
Yeah, absolutely.
The magic 3 letters. How many of you in this audience, let me turn to before I come to you, how many of you in this audience have heard the magic 3 letters SIP? Okay. The rest of you who haven't are not going to be as rich as you potentially could be. So I'm going to get him to explain SIP to you. And those of you who didn't know what it meant, hear him, take notes. Take notes right now. It could change your life.
No, it's very straightforward. Investing doesn't begin till you start saving money. That's one. And saving is actually not a matter. Most people, it's a procrastination. We have so many avenues to spend money that, and spending money is, joyful activity.
He's coming to it right now.
And of course, he gives cash back too, so he will tempt you to spend it. And there are always, so many temptations to, to spend. But if you actually don't make it a habit, it is not a function of scale of money that you earn. It is how disciplined you are about it. And that 30-year compounding the money to make it into a 50 crore thing could be a very realistic thing.
And forget SIP about that. Just means don't worry about the movement of the market up or down. Take Absolutely. The same amount, put it away every month. Irrespective of the market is up or down.
Yeah, what you said about 6 months, now I would say that any money which you need in the next 5 years should be invested in a very conservative manner. The money which is meant for a non-negotiable goal, the money which is needed for something to be spent on which is important. All that money which you are unlikely to need in the foreseeable future should be invested in equity. And what has happened with this mutual fund, that it has become easy. With your 500 rupee savings, you can do it. You can participate. It's very hard to buy the stock market, the specific stock yourself. Of course, if you have the time, if you have the inclination, you can well do it. But if you want to keep it simple, you don't have that the time and inclination, then by all means start your SIP account. 500 rupee you get started. You will be able to demonstrate it to yourself in a span of 2 years. Then I don't think you need any hand holding, any financial education. If you have these two things in place, start with your saving, start your SIP account, don't expect anything, don't look at the value for the next 5 years. Most things will actually fall in place because there is no better demonstration than actually experiencing it yourself.
Okay, that's your advice. Now, Mr. Hiranandani, you will say, no doubt, all of this is very well, but the first thing that everyone should be investing in is a house, and that's the way to look at it. Now, tell us, first of all, real estate, been going through some rocky times. A lot of real estate prices are down. A lot of builders, real estate companies are in trouble. People thinking of buying real estate, the first question in their mind is that investment safe at all? In many ways, what happens if the builder doesn't deliver the house, and so many issues we're hearing about. Tell us about the state of the real estate sector, and whether you still think it's a good investment right now, or will prices come down further?
I think the real estate industry is going through very difficult times. It has got a triple tsunami that it has to face, and obviously there are difficulties for the real estate industry in order to do it. But for those people who want to buy an apartment, there couldn't be a better time than this to get the good rate from the developer, a choice for the type of product that you want to have, and for the first point of time, you could possibly even negotiate the price, which was never available to us in the last 15 to 20 years. So I think this is a great opportunity to buy. And look at the long-term solution in terms of what you needed to buy. If you don't buy a house, there is no other social security that you have in India. If you don't have a house, the kind of inflation which has killed people from being able to afford any house is stupendous. If you had to come to Powai and buy a house in 1989, you got it at 500 rupees a foot. And today it's available at 25,000 rupees a foot. So the kind of inflation which has taken place in the real estate industry, I think in many respects goes ahead of the stock market in terms of growth of prices, at least for the good products or the good quality products that there are. Today, I think the opportunity is there. So I would definitely first target to buy a house. After you have a house or maybe 2 houses for your family and children, after that, yes, please go ahead into the stock markets, buy gold, buy mutual funds, buy stock markets. And I would sincerely advise for those who want.
Okay, why do you need 2 houses? Because by the way, buying that one house is enough to then, like, that's for 30 years worth of savings will go in that one house. Why on earth does anybody need 2 houses to live in?
I think you do need 2 houses. You have children, who you have the future, or Anthony, you can get a rental income which will come to you, and you will be covering inflation of prices which will take place in future for your child or other things. And in the meantime, I believe rentals will grow over a period of years. Up till now, the returns on rentals have been very low, 2 or 3%. But if you take inflation into account for the prices having gone up, I think even the rents today on a 10-year-old house go up to 7 to 8 to 9% if you look at the earlier price at which you purchased the house. So over a period of time, 1 house for yourself and 1 house to rent.
Yeah, I mean, although to be economically correct, theoretically, if you're only getting a 3% return from a rental property today, you could sell that house, put the money into a mutual fund or something, and get 5 to 6% return. So the fact that your rent, that's in a sense sunk cost. So that is something to keep in mind. Right, I want to get everyone to weigh in on houses, but before that, let me get Mr. Khandelwal to talk about gold, that old perennial favorite of so many Indian households. And you're saying, that's what insurance do you have? Well, for many people, that gold used to be the insurance. Gold not necessarily being the best performing of assets, which is not to say that it may not be. Some people say it's a great store of value if governments keep printing currency notes the way that they do, and if you have wars and nuclear war between the USA and North Korea or whatever you have it, gold may well end up suddenly being the surprise star in the coming year. Mr. Khandelwal, tell us about the price of gold. How do you think it's going to do next 1 year?
See, gold is the only currency you can encash across the world. You can use it in 300 countries in the world. Share market or any investment you cannot. Mr. Hiranandani
could probably cash dollars in most parts of the world also.
Yeah, no currencies go
Other
behind the
than North
50 countries. And Mr. Hiranandani was talking about the social security. I can say the gold or jewelry is the best social security. You can cash, you can wear, and you can use for the marriage and everything. Because this is the safe haven investment. They call it safe haven investment. And see, as I told, 25% investment is required. So gold is the best investment. You can in cash, you can use, and you can see the price high in the 10% year on a year basis.
But that's not been happening in recent times. Just to be crystal clear, I'm not saying it won't happen in the future. In the recent past, there's no reason why it won't outperform. And it's possible that because gold prices are down and have been down for the last 3 or 4 years, this may well be the year that they actually do very well. But they've been reasonably stagnant, right, for a period of time, gold prices. Bounce back a little bit this year, but by and large have been down or stagnant for a few years, gold prices.
This is happening everywhere, in the property, in the share market, everywhere.
Well, share market was up actually 24% in the last year. So, I mean, it depends on which ones that you bought. But okay, gold. Let me just get everyone else to weigh in on gold, and then I'll come to other possible things. Ramesh, if you're back with us and you can hear us, what do you think about gold or real estate? Let me take you out of your comfort zone.
You know, obviously you need a house at some point in your life, but with rental yields so low, might as well rent rather than own. And I tell you, the problem with gold and with real estate is that they are not very tax efficient, and they don't provide a dividend stream. I mean, when you buy a business, when you buy an equity, they provide you with a handsome dividend stream that compounds at some phenomenal rate. So that's additional to capital appreciation. You also get a dividend stream, and that's what's helpful. And I'm saying if you're young, you want to invest. You know, someone made the statement, I think Warren Buffett said that a ship is, you know, safest in harbor, but it's designed for the high seas. It has to take on the high seas if it's to meet its destiny. So if you have a financial destiny, if you want to be rich, if you want to be financially free, you have to take on the high seas. You will be safe with a fixed deposit, you'll be safe with gold, but where are you going to get rich? Where are you going to get financial free? That's the reason we recommend as an equity exposure.